Hello guys, welcome to another update. My name is Nestor Armstrong and I'm part of the Etoro Popular Investor Program. I wanted to share my thoughts. I'm okay. I'm at my home office again, abiding by the laws of our government. And I hope everyone is okay and healthy and staying indoors. I, I wanted to share with you that our portfolio has been pretty much dead even. There are some green days, some red days, but it has pretty much stayed the same. That's because the market's really behaving just like it's expected, not really knowing where to go. It's going halfway, trading sideways, as some might say. I also wanted to share some tips and tricks that have been very well received by the Etoro community in bettering your ways that you invest. Now, whether you trade or you invest, I wanted to tackle 3 common mistakes that happen when you're either investing or trading in something. The first one of them is investing on trends I did not fully understand. Just because something is trendy, just because a lot of people are putting their money in that, doesn't mean necessarily that it'll always be a good investment and that it'll always be making money. A clear example of it was Bitcoin. And Bitcoin was all the rage on 2012 and just recently in 2018. And what happened? The price of Bitcoin started going up, as well as other cryptocurrencies which started being added into the Etoro platform, Ethereum, Litecoin, all the sorts. Today there's a whole lot of more instruments than there was back in the day, but everyone on the platform, at least 90 or 95% of the people who were investing on that, had the expectation that Bitcoin was not going to go to 10 or 20,000. It was going to go to 75, $100,000 overnight. They were going to buy. They were going to be basically millionaires overnight. And what happened? It crashed. It crashed just like on 2012 had crashed. That did not end well. A lot of people lost a lot of money on betting on a trend that they did not fully understand. They just got into it because it was making a lot of money. And I'll admit that I used about 5-ish% of my portfolio. Why did I use so little? Seeing that it was a great return, that it had some great returns, I knew that it was a trend that I did not understand fully at the time. Now, if they'd asked me to invest in Bitcoin, I have a very different opinion about it. And most of the people in the site would also have a very different opinion. I have not seen any more people that, maybe a handful of people that have put their whole portfolio in cryptocurrencies, which will completely destroy your risk score, by the way. But I have not seen that happen again because people learn from their mistakes. It made a comeback in 2019. It might go back up somewhere, but my investment strategy shifted, and Bitcoin no longer had a place in it, sadly. The second thing, the second error that I encountered on my career was changing strategy too often. Now, when you are an entrepreneur like myself, when you're a businessman, you want to be on the best shape ever. You want to have the best strategy, the most updated strategy. You go and take courses over courses, that classes over classes that give you information that you immediately want to shoot out into the market. And what I realized about that is that changing your strategy too often will detriment your returns. Why? Because when you're always shifting gears and you're always changing instruments around, you never allow those investments or those trades to reflect the true nature of your strategy. You have a strategy that is going to go for 20% yearly, and on the first month you go like, oh man, I just lost like 3% of my portfolio. This does not work. I'm going to shift into another strategy. I'm going to look on other profiles on Etoro. Let me see what other people are doing. Let me see what the best investors in the world are doing. And you just copy that. And then next month, when for some reason that specific strategy doesn't perform in the way that it's supposed to, but on the long run it'll do. It'll it's not a reflection. That bad month is not a reflection of the strategy. So now you're sticking in between strategies, so you're gonna have the worst of all of the strategies that you picked. In other words, you're shifting so often that you're shifting. I'm not talking about rebalances. You can rebalance every month, every 4 months, every some people rebalance even weekly, which requires a lot of overhead. But I'm talking about shifting your strategy completely, like saying, okay, I'm gonna stick to stocks, I'm gonna stick to ETFs, or you know what, I hate the healthcare sector, I'm gonna erase everything that I have in the healthcare sector and I'm gonna put it all on the hotel and restaurant setting. And with the coronavirus right now, that type of change would have decimated your investment portfolio. Does that mean that restaurants and healthcare is a bad investment? No, but they suffered from a crisis, from a healthcare crisis that no one could have foreseen. So that's my second mistake. That has been one of the mistakes that I've seen happen to a lot of people, including myself, on my early days, which is changing your strategy way too often, not having enough time to see if your strategy actually works. And for that happen, I would recommend sticking to a strategy at least 6 months to a year, so that you can have an idea what your annual return will be compared to whatever you're comparing. If you have a goal in mind, like saying I want to make 20% per year, or if you have a more dynamic approach like myself, which is, hey, I want to beat the S&P 500. If by 6 months this thing has not beaten the S&P 500, I'm going to take a look at it. The third and one of the most common mistakes that I see is trading way too many instruments. Like, okay, sometimes you go into a profile, you go into the trades or the investments or whatever, and you see 30 companies, stocks, obscure as hell stocks, from China, from Belgium, from Germany, from the US, from Nicaragua, from many places. And the first thing that comes to mind is, how is that guy keeping track of those companies? How does that guy know? I mean, he could be the best investor that has ever lived. I kind of doubt it, because I see a lot of profiles like that. And this is usually the result of, I'm going to call it virtual diversification, which is, I think this and this and this. They go into an income statement not really knowing what they're doing, see that their numbers are growing, not really caring where they're not doing their due diligence on the investigations, here the competitor, their economic modes, their cash flow, and just buying stuff for the sake of diversification. When you buy stuff for the sake of diversification, that is one of the worst things that you can do, because you cannot expect to, we go back to error number one, investing in things that you do not fully understand. 10 businesses is a little bit overwhelming. Checking every single earnings report, quarterly report for 10 businesses, I cannot even imagine having to check the earnings report, statement, income, cash flow of 20, 30, even 40 companies. What they're betting is that their companies are going to go sort of similar as the market. And that's okay. That's perfectly okay. If your goal is to make a certain percentage, that'll be sort of reflected in your yearly profit. But if you're someone like me that has a very specific, a very dynamic goal, that is beat the S&P 500, you are most likely not gonna beat it by just buying a bunch of companies for the sake of buying a bunch of goodish companies. You have to buy companies that are solid, that have good income, good cash flow, things that we have discussed in earlier videos, and sticking to that strategy. So with that said, I hope everyone's safe. I hope this video has been helpful for you. If you have seen that this video has been helpful, thumbs up would be appreciated. And if you would like to see more videos like these, subscribe and leave me a comment on the Etoro platform on my YouTube channel, Nestor Armstrong, where I'll be doing updates every now and so often. So stay safe and trade smart.